Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Brian Menell, CEO of TechMet, to discuss the technology metals critical to electronic vehicles and sustainable sourcing. Brian, it's great to have you with us. Welcome to Trade Talks. And what would you surmise are the goals of the U.S. government and its development bank in investing $25 million in TechMet, specifically pertaining to nickel and cobalt mining? And will there be any shift in the strategy as a result of the U.S. election?
Yeah, I mean, to begin, hi, Jill, great to be here with you. To begin with your first question, the DFC is a development funding agency of the US government. So their rationale is to encourage sustainable and responsibly governed development in emerging markets, but they do that in the context of American national interest. In the case of what they have done through their investment in TechMet, which I believe is the first time in history that a US government agency has taken a direct equity position in a metals and mining company, is for the reasons of sustainable, responsible development, but also to start to help to counter the Chinese dominance over the supply pipeline of these critical metals that go into the energy transition that we're at the beginning of.
Tell us about the investment portfolio of TechMet to date.
In TechMet, we have a range of projects that we're funding and developing. We have a lithium-ion battery recycling company, Li-Cycle, that we've been funding over the last 2 years with a producing plant in Canada. And in fact, in 2 weeks' time, we start commissioning our first US lithium-ion battery recycling plant in Rochester, New York. We have a vanadium specialty chemicals plant in Arkansas. We have the nickel cobalt project in Brazil that much of the funding we're getting from DFC in Washington is going towards the first commercial plant. We have tin and tungsten mines in Rwanda, and we have an interest in producing rare earth metals mine in Burundi with a partnership to build processing capacity in the US.
Is it fair to say that China has a monopoly in what's being referred to as technology metals?
China's executed over the last 15 years an enormously effective program of securing control over these inputs into the power, energy, mobility revolution. So, while the rest of the world were sleeping, China's effectively won a war that nobody knew they were fighting till they've lost it. And they do indeed now have a very dominant position over the supply pipeline of all of these critical materials.
Where do you envision TechMet in the future with regard to its international reach?
We'll continue to scale our projects in South America, North America, and in Africa. We are looking at various projects elsewhere in the world that we'd like to add to our portfolio over the coming months and years as we build a substantial independent capacity to produce, process, and recycle these metals and metal chemicals that facilitate the global clean energy transition.
What is your call to action to the greater American investment community about the future of technology metals? It sounds like we have a little bit of work to do here.
Enormous amount of work. We're at the initial phase of a really epic supply-demand dislocation. The power, energy, mobility revolution is unstoppable, and the metals that go into electric vehicles, renewable energy systems, are in structural short supply. And in order to meet the exponential growth in demand, as electric vehicles demand grows, as renewable energy becomes a bigger and bigger part of the global energy equation, will require many multiples of the global production of nickel, cobalt, lithium, rare earth metals, and the other metals we focus on as TechMet. And this will require billions of dollars now to sustain or to build production, and it will require significantly higher prices for these metals to justify the production to meet this demand. So we do need a major global industry transformation in order to ensure that this energy transition is not slowed down or compromised by the availability of the sources of supply of the key materials that go into these systems.
Is there an inherent social impact to your operations in emerging markets such as Brazil?
There certainly is. I mean, we're investing in environments where they're very poor communities, where we're providing jobs. We do it in a very well-governed manner from a social and environmental impact point of view. So mining, processing, and obviously recycling, which is entirely, a contributor to a responsible and sustainable circular economy, can be done in a way which is very constructive and very added value additive to communities and environments where we operate. And it has to be that way. You know, these are products going into consumer goods that go through complex pipelines from an environmental point of view, from an energy point of view, and they have to be very carefully and very well governed. And that's another mandate of DFC in Washington, to ensure that companies and projects that they invest in, such as ours, are very well governed from an ESG perspective.
It's encouraging to hear, Brian. Thanks for joining us on Trade Talks.
Great. Thank you very much. Great to see you.
You got it. And thanks for joining me.
Bye.
I'm Jill Malandrino, Global Markets Reporter at Nasdaq.